The U.S. housing market has experienced significant price increases in recent years, affecting affordability for many Americans. Understanding the factors driving these rising costs is essential for prospective buyers, policymakers, and industry professionals. Here are the top 10 reasons contributing to the escalating prices in the U.S. housing market. 1. Limited housing inventory. A primary driver of rising home prices is the shortage of available homes for sale. Many homeowners who secured low mortgage rates in previous years are reluctant to sell, reducing the number of homes on the market and intensifying competition among buyers. 2. Increased demand from remote work trends. The shift to remote work during the COVID-19 pandemic allowed many individuals to relocate to different areas, often seeking more spacious or affordable housing. This increased demand in various regions has contributed to higher home prices nationwide. 3. Rising construction costs. The cost of building new homes has risen due to increased prices for materials and labor shortages. These higher construction costs are often passed on to buyers, contributing to overall price increases in the housing market. 4. Supply chain disruptions. Global supply chain issues have led to delays and increased costs for building materials. These disruptions have slowed the pace of new home construction, exacerbating the housing shortage and driving up prices. 5. Low mortgage rates in previous years. Historically low mortgage rates in recent years encouraged many buyers to enter the market, increasing demand. While rates have begun to rise, the initial surge in demand contributed to higher home prices. 6. Population growth and demographic changes. Population growth, particularly in certain regions, has increased the demand for housing. Additionally, demographic shifts, such as millennials entering prime home buying age, have added pressure to the housing market. 7. Zoning regulations and land use policies. Restrictive zoning laws and land use policies in many areas limit the ability to develop new housing, constraining supply and contributing to higher prices. Efforts to increase housing density often face local opposition, further exacerbating the issue. 8. Increased investor activity. Real estate has attracted significant investment from institutional and individual investors seeking profitable returns. This increased competition, especially for entry-level homes, has driven up prices and reduced the availability for typical homebuyers. 9. Wage growth and inflation. Rising wages and broader inflationary pressures have increased consumers' purchasing power, allowing sellers to command higher prices. However, when home prices outpace income growth, affordability becomes a significant concern. 10. Tax policies and incentives. Tax laws, such as mortgage interest deductions, can influence housing demand by making homeownership more attractive. Changes to these policies can impact buyer behavior and, consequently, home prices. The rising costs in the U.S. housing market result from a complex interplay of supply constraints, increased demand, economic factors, and policy influences. Addressing these challenges requires coordinated efforts from policymakers, industry stakeholders, and communities to ensure a balanced and affordable housing market for all Americans.